Yes, hello everyone. My name is Felipe Ferri Paes, and today I will be presenting the masterclass about digital finance and SME access to credit. Um, I am a research associate at the Cambridge Center for Alternative Finance, and for the last 6 years, I'm working in the space of digital finance and how it can create a real impact in the world, and also supporting small businesses um, to access credit and support their business as well. So yes, the session today I will introduce a bit of the work I do here in the Century about digital finance companies, and then also how SMEs access to credit. So the supply side, which are fintechs, and the demand side, which are MSMEs. And then I wish to do a bit of a deep dive on how data sharing can support MSME finance. It will be followed by a Q&A and discussion session. Next slide, please. Yeah, so I will start here about talking about the research I will focus today. So the supply side. I have like two works which are the future of global fintech. This research was done in partnership with the World Economic Forum, so it provides a global overview of the fintech markets, and it covers like 6 global regions, so Latin America, Asian Pacific, Sub-Saharan Africa, North Africa and Middle East, Europe, and US and Canada. So in this research, we have over 200 participants and covering also 6 fintechs verticals, so digital lending, digital capital raising, digital payments, digital banking, insurtech, wealth tech. From the supply side, I have some research done on MSMEs access to credit in Latin America and in Asia. And yes, in this research, we focus on the customers that have used digital finance, so business customers that have accessed credit through these platforms, and how it supported their business. So from the ticket amounts and what was the effect of the credit for their businesses. So for the first research, because most of those fintechs operating in multiple jurisdictions, and many of them also operate in multiple regions as well. So just showing that the fintech industry is a very global industry. Okay, so next slide, please. So yes, what are the main takeaways from the future of global fintechs research? So fintech firms are frequently looking to revamp their business model, and yes, they harness innovation through AI, and they are always looking to expand into new markets, and they also to thrive if they're backed by an enabling business environment, so having supporting regulatory environments, having partnership with traditional financial institutions as well, and having also positive funding environments. But it doesn't come without barriers, so many of them also face considerable regulatory and policy uncertainties, and they also look for more support from regulators, and they are quite inclusive, so they underpin a sustainable growth. So their customer base is basically done by these vulnerable customers, so made of MSMEs, women, young people, and they help to those people to access finance, mainly in emerging markets. Next slide, please. So yes, in this research, we look to understand how the fintech industry is performing. So we ask then what are the rate of their customer growth. And as you can see, we collected data from 2020 up to 2023. And while the customer growth was very high during the COVID, which was understandable. No, like many people accessing finance because they are just going digital by that time, and then the customer growth, while it's positive, it's like slowed down, but it's just getting going into a sustainable pace. So it's still positive, but it's slowing down, which is for the fintech industry, it demonstrates strength and resilience. And another factor is that even though the customer growth was slowing down, they managed to have positive revenue and also profit, mainly in fintechs in Latin America, for instance, and APAC, which was quite interesting. So yes, other things that were interesting, like we also have realized some nuances across fintechs verticals. So we have seen that digital banking and digital payments, fintechs, they were able to keep a better customer growth rate and also generate more revenues and profits. And yes, while like fintechs from crowdfunding fintechs, mainly the ones doing equity crowdfunding, have suffered more in this period, but it's just showing how the fintech industries is changing and growing. Next slide, please. Yes, we also explored what drives and hinders the growth of fintechs. No, and as expected, consumer demand has been the main factor. So what does it mean? No, like if fintechs are growing because people are adopting more digital financial services, so it's a very important engine for fintech growth. And yes, it's like 90 of fintech responded consider it positive for their business. No, which was followed by also access to skilled talents, which means that they are happy with their employees, which is interesting as well. And it was very supportive for their business growth. Another factor is the digital and financial literacy of users, which is interesting. Like there are many discussions, no, like we have to improve digital financial literacy of people. It will support the industry, but on the fintech side, they really think that it's a supporting factor. So, which also indicates that if people start using fintech or digital finance service and products, they kind of learn by use and they start using more. So I will get to understand what does it means, and then we'll start using more service offered by the platforms. And then we have regulatory environment. No, it's very important. So if we are collecting this data for so many years, like over the 10 years we do research on fintech. We can see that the perception on the regulatory environment has been growing. So, which means that if the regulatory environment is supportive for my business, so I manage to grow. So yes, they are always demanding some positive result from the regulators. And yes, I think some of the obstacles are like macroeconomic factors. It was more strongly perceived in the first edition of our study. We had two editions. In the last one, it was lessen the effects, like it was like less negative. But in the first one, it was a very strong factor because by the time there was many discussion on inflation and so and then it has improved a little bit compared to the first edition, but it's the main issue faced by fintechs. And then the sentiment towards the funding environment has also improved, which also follows what some studies have shown, which the funding environment had slowed down after the COVID period, but now it's kind of recovering. It's not so as strong as 2019-20, but yes, fintechs are realizing it, and then the result has been more positive now. Next slide, please. So yes, keeping the discussion on what support and hinders fintech. So one key thing we tried to understand in our last research on fintech was the partnership between fintechs and traditional um, financial institutions. And it's very important for their business development. No, so we asked them what was the motivations for this partnership, and many of them just said no, we look for technological solutions and infrastructure, which it also we also ask what is the main type, and many of them say like we have API connections to those with these incumbent financial institutions, which is also we see now many discussion about open banking and open finance, so we can understand they are all kind of benefiting from each other with those data sharing frameworks. And so we can see this reflected in the results of our research. So yes, technology is one of the key drivers of those partnerships. Also, other factors were the enhanced credibility. So once fintechs partner with incumbent institutions, they manage to enhance their brands, and then also many of them do they have partnerships to enhance their products or offer new service, and many also use this to access capital, which is very important, mainly in emerging markets where fintechs suffer more to access capital. So they see those partnership as an important means for them to get funding or access capital. And also, I think this one is quite obvious. No, like they also look to access more customers, or increase their customer base while doing those partnerships. So partnerships between fintechs and traditional financial institutions play a pivotal role in fintech growth strategy. Next slide, please. So yes, as we can see, technology is very important for fintech's businesses. So it will lead how they will think about their business model, how they engage with their clients, and how they will also partner with other financial institutions. And in this survey, and we tried to understand, how fintechs are adopting AI and for what. No, and what we have found is that 80% of respondent fintechs have already implemented AI in one of those 5 business domains we tried to we collected data. So 80% of them already adopted AI for either customer service or process reengineering or risk management or generation of new revenue or customer acquisitions. And the main one was customer service. So like basically most of those fintechs already offer AI or have some AI implemented in customer service. So for chatbots or customer support. And the ones who still don't have it, they were about to implement it in the next 2 years, which by now many of them is already implemented, because this publication was from about 1 year ago. Also, many of them also implement AI for back office functions, so process reengineering and automation, looking to support their admin functions. So this means that many of them wants to increase their productivity, and they are this is also one of the domains many are implementing or already implemented some AI function. Also, risk management was very important. When we have a report we published in 2020, which is AI in finance report. So by the time, risk management was the main domain that fintechs were implementing AI in. But it is too important. Many of them already implemented it. They are going to implement it. You can see 29% were about to implement it in the next years. But now many are first think on having AI for customer service, and risk management is too important, but not the main one. And then also many try to generate new revenue through AI adoption. So, offering some data analytics service or, dashboard for their clients, which will have AI in it. And the last one is customer acquisition, which is basically, using AI for CRM, marketing, and those functions. And yes, one thing which is we also noticed is that fintechs from advanced economies tends to implement AIs or are already have AI implemented in a higher rate compared to the ones in emerging markets. Although the ones in emerging markets are all implementing in the next years, and very few fintechs there have no plans to implement it in any of those domains. And next slide, please. Here I want to ask you, like, how do you think AI will support financial institutions to improve service to SMEs? If you can put your ideas on the chat, and then we use it for the discussion by the end of the masterclass. Yeah, Keen, when you want, we can keep going. So yes, the question is connected to the AI adoption, the impact of AI on profitability, just to see, like the importance of AI on like fintech businesses. So fintechs or financial institutions overall are adopting AI, but what does it mean for the business itself? No, so what are the benefits or even the barriers you can face when you are trying to adopt AI? And then we try to understand the impact of AI on profitability and customer experience and cost reduction for the company. And interestingly, like we can see that AI is basically bringing positive results for companies in both emerging markets and advanced economy, with companies in advanced economy being able to realize slightly more the benefits. So you can see that both fintechs operating in emerging markets and advanced economy are managing to reduce costs. So they will invest in AI implementation. So the upfront cost will be high. It's a kind of a barrier for them. But then once they manage to fully deploy it and start using it, they're going to see results in back office operations or even in front office ones. And they also realize, very importantly, like the customer experience improve with AI adoption. So once they offer a service or products with AI implemented, they manage to collect positive reviews from their customers. And also having chatbots or those customer support with AI is positive for them. And yes, we can see these effects more strongly in advanced economies. Of course, few of them will see it's like worse or significantly worsened, like very few, but like slightly worsened. We didn't fully ask it why it worsened, but it's something we could explore further. But yes, few of them did have this feeling. And then we also try to understand, okay, there was effect on profitability, and it was positive. It was also realized in the report we have published in 2020. So yes, it's interesting. Like we also asked them like how difficult do you find to measure the ROI of AI, and many of them find it's difficult, but then at the end they managed to realize some profitability coming from AI, which is interesting. And yes, let me see if I have any good number here uh, for the regional, because just too many. Uh, so yes, I wanted to talk about some barriers as well. Um, yes, cost of implementation was an important barrier. So 85% of those that of companies that implemented AI found, cost of implementation and maintenance one of the main barriers of for implementing AI. Also, regulatory uncertainty was reported by 77% of fintech respondents as a key barrier of AI implementation, and then access to talent. We have seen that talent is very important to fintechs for their business growth, but when it comes to talent to support the AI adoption within those companies, it's a barrier like many of them face, which is very interesting and something they will have to tackle in the future. And also from the side of the regulators, they have to better understand how they can improve regulations to support those companies to implement AI better. And yes, among the risks like data breach and private is the main risk faced by those companies that participated in our survey. So 84% classified it as moderate to very high risk, and also um, like many of them also said AI generated deepfake was a moderate to high risk, and many are also concerned about cyber attacks that can be done by AI. So yes, this is what we have on the realm of AI. We are going to be publishing a new AI report in like 9 days, which is very interesting. We are going deeper in this realm of AI adoption in finance. And yes, many of those findings will be deeply discussed in the new report. So yes, you can keep an eye on the Cambridge Center for Alternative Finance page and get more insights into AI adoption in finance. And next slide, please. So yes, here I just have some key takeaways from our research. Now, like 8% of fintechs are using AI across multiple application areas. Like 64% have offer AI-enabled customer communication channels, as I said, like chatbots. And 24% consider AI-generated deepfakes as a very high risk, and 87% said that cost is the main barrier for AI implementation. Yes, next slide, please. And now, as I showed at the beginning, like regulatory landscape is very important for the fintech business growth. So we also collect data on the perception of fintechs on the regulatory landscape. So we asked, like we have seen that 62% of surveyed fintechs finds the regulatory environment adequate and appropriate for their fintechs activity, which is very very good for them. I mean, this is a data, as I said, that has been we are collecting for many years, and we have seen this number being positive for over the last 10 years. And yeah, this is, I mean, keeping a regulatory environment. So when her regulators make the regulations, like they mind about clarity in the regulatory approach, or making the reporting and compliance process more clear. They have a better coordination, and also they train their staff to have more capability about what fintech means are very important. And then, streamlining the fintech licensing and registration process is very important. We are, now we have the case in sub-Saharan Africa, which many countries like they develop that fintech passport, so to streamline fintech licensing, and yes, this is something very important for for the business, for fintech business to keep thriving. And yes, we can see like what are their perceptions. So we can see the clarity in many of them. They find that the regulatory approach is adequate, but on the other hand, they still face some issues. So they think that the regulatory approach is clear, but it could be better. And like many also face like fintech licensing and registration process. It's like fintech licensing and registration process was an issue more strongly felt on emerging market and developing economy, mainly in sub-Saharan Africa and Latin America. And like clarity in regulatory approach was a strong factor, adequately mentioned by fintechs in the Asia Pacific, for instance. So those are some key highlights on the regulatory landscape. Next slide, please. So yes, one of the main topics we try to unveil in our research is how fintech can increase financial inclusion, and particularly in this research series, the future of global fintech, we want to focus on financial inclusion, and we asked fintechs to know what are the how their customer base is made, and what is the revenue proportion also made by those customer segments. So we explore like we explore like 6 customer segments. So MSMEs, women, low income customers, youth, senior customers, and remotely located ones. And again, I think the main customer segments is MSMEs with, like basically half or over half of fintechs focusing on these segments. Women is a very important segment for fintechs as well, but equally low income youth and remotely located customers. Senior, like fintechs have less senior customers, it might indicate that this segment still use more traditional products or go for traditional institution, but yet it's a gap that fintechs could focus more. But coming back to some interesting data, like low income population was very strong segment for fintechs in EMDEs. Those fintechs in these markets really focus on these customer segmentations, because yes, I mean, of course, fintechs in those markets work more as a complement for the financial system. No, so maybe like fintechs the only way for them to get into the financial system, while in advanced economies, fintechs work like compete more against banks. So it's more of an option for customers, while in emerging economies, like it might be sometimes only the only way that those customers will manage to access finance. So yes, also we have seen MSMEs, the main clients, and they also have the ability to create more revenues to fintech. So it might explain why fintechs focus on acquiring more of customers from these segments because at the end they are the ones which bring more revenue. And then low income customer is, particularly important for EMDs based fintechs. And, although they bring less revenue, they are still important customers for the ones in emerging markets. So this just shows us how inclusive digital finance can be for those vulnerable customer segmentations. Yes, next slide, please. So here, yes, we also then offer like what's, financially inclusive products fintechs were offering. And yes, again, most fintechs offer products to MSMEs, then for women, and then, low income. They do like do targeted customers for those three groups more than the other groups. And then firms in EMDs offer more products for underserved customers compared to the ones in advanced economy. For that reason I just talked about, they are maybe the only way for them to access credit or to access finance. Sorry. And yes, fintechs in EMDs also reported more focus on sustainable development goals, mainly SDG 8, which is decent work, SDG 9, 5, and 10. So some products like we asked them, we explored, like many of them will offer flexible repayment options. So we can see fintechs in EMDs like have more of those products compared to AEs. So many of them will offer like micro finance products, so micro insurance or micro loans. So in fintechs in EMDs, like in a very higher rate compared to the ones in advanced economies, which is very interesting. It's just show again how like digital finance and fintech products is very important for those underserved customers. And one type of products that was more offered in advanced economy is cross-border transfer at lower rates, which is also found in other studies. Like it might be basically due to people like foreign people living in advanced economies who will then send money to their families in their countries. And we can see that fintechs in this segment, like payment segments, really focus on this cross-border transfer business model. So as I just wanted to give you an overview of the type of financially inclusive products and showing how fintechs based in emerging markets are more inclusive in terms of product offering compared to the ones in advanced economies. Yeah, next slide, please. So yes, now I would just quickly talk about the demand side. So, how then MSMEs access credits, and how digital finance is important to them. So key takeaways now, MSMEs are critical drivers of growth. The most of economies are made of MSMEs. They usually employ like half of the worlds are employed in SMEs. And this is especially in EMD countries, but many of them still face credit constraints, which the IFC calculates in 5 trillion annual the finance gap for MSMEs, which is quite impressive. So there's a huge market there to be explored, and fintechs can be maybe a means for SME credits. So we had those three surveys I showed you at the beginning. So across all surveys, most of respondents were sole traders or micro companies, like at around a 70 to 80% rate. And many of them looked for credit for short-term needs, so working capital, or paying a bill. Many of them use personal current accounts. So we asked them like which traditional finance product do you use for your business purpose, and many of them still use personal current accounts to run their business or use personal debt or credit cards for this, which is just showing us some constraint in financial health. And yes, many of those MSMEs found it quicker to get credits from fintechs instead of traditional banks. And then, we also try to understand what are the effects of digital fintech credits for those MSMEs, and many reported positive outcomes. Next slide, please. So yes, again, we can see here, like the chart is from our latest publication, which is the one in Asia. So many, like 60% of respondents were sole trader and 80% micro entrepreneurs. Same thing for the study we did in APAC and Asian countries and Latin America. So over 70% of respondents were like micro institution, and many of them were male. Just the Asian study, we had more female respondents, which mostly were from Philippines and Indonesia. So, which just show us, of course, how do we do this study? We partner with fintechs and ask them to share our survey with their customers. We had some inclusion criteria and also like just customers who got credits in the last 12 months. They should be unactive businesses and so on and so forth. And this was kind of a limitation of our service. So we didn't have full control of the respondents, but still it just showed that many of fintech's customers are small or micro businesses. And next slide, please. So yes, we asked those MSMEs which type of traditional financial products they use, and again, many of them used personal products to run their businesses, which just show how they struggle to access the financial markets. So it's just show a very big gap, and on the other hand, also an opportunity for fintechs to bring there to the financial industry and offer business products. So we can see that MSMEs in Latin had higher access to business accounts, mainly the ones in Brazil, but also there was a high percentage of ones using personal credit cards for business purpose. In EMD countries in APAC, in the Asia Pacific, small entrepreneurs mostly used their personal accounts, but also had access to business loan. So yes, depending on the circumstance, they also managed to get some business loan, but still they use personal current accounts for business purpose. And in Asian countries, it was the region where most MSMEs relied on personal accounts and had very little access to business products. So just showing us that the South Asian region is still like MSMEs in that region really struggle to access the financial industry. Next slide, please. So yes, we asked then like, which was before going for getting credits from a digital financial provider, have you tried other providers? And of course, many of them tried first a bank, and but just a few of them then have been granted a loan or credit, which show like one of the main reasons for them to then look for a digital credit. And also, like many of them relied on family and friends to get to access capital to their business. And in Asia, microfinance institution was very important, and approval rates were better than banks, as you can see. No, like 57% looked for those institutions, and then out of it, 66% managed to get credit. So yes, in Latin America, so other findings like in Latin America was the region where small entrepreneurs had more difficulty in getting funded by banks, and microfinance institution was very important for MSMEs in Asia and APAC. Uh, uh, um, yes, MD countries, sorry. So just showing that microfinance is very important for the Asia as a whole. Next slide, please. So yes, we also asked, we also wanted to understand how was the borrowing experience of MSMEs, and yes, so what was the reason you looked for credits, and we could see that accessing short-term capital was the main reason. So for having access to working capital, and then to purchase of an asset can be to buy something for their stock, or some products to their businesses. And yes, also paying for another debt was one of the reasons that those MSMEs looked for credit. One interesting thing is that fintechs in Asia, the Asian region, also got credits to expansion and growth. Why that? Because in this region, like women entrepreneur got this credit in APAC, women entrepreneur mostly got credits to open or start their businesses, which was a very important finding. So just showing how inclusive digital credit is mainly for women entrepreneur. So they literally got the money and started their business. And then yeah, we also try to understand the ticket amount, and usually MSMEs borrow low amounts, with median tickets varying on across the three regions, with the Latin American region having higher tickets, mainly in Brazil. But we can see that overall amounts are very low, and impressively, like in Asia, it's very low. And just showing that it's so inclusive that those small entrepreneurs just literally need very few amounts of money to start their business. And next slide, please. And then we also try to understand the impact of the digital growth on their business, and you know most of them said it had an impact on their revenue. So they managed to increase their revenue, and then generate more profit, also acquire customers, and then we many of them also here, I think it's reverted, but many of them also had positive effects in their business goals overall. And one thing we can see, like the number of employees had been like no change, which is expected. Many of those businesses are just small entrepreneurs or micro or sole traders. We wouldn't expect that getting credits, like they would hire people, given that most of them were sole traders, so they use it the credits for working capital, and it's just helped then in other business domains such as revenue and profit. Yes, next slide, please, because I think we are reaching the time. So yes, I think some key highlights are these ones. A small number of SMEs also reported an uncomfortable increase in debt from digital finance, or missed a lower repayment for another provider. But generally, most of them, like managed to increase inventory, or buy raw material. They added new products and service to their portfolio. They paid off existing loan, and they also managed to attract subsequent funding, which is very important. Which this means that once they get credit through a fintech, they manage to also improve their credit score, or creating business history, which will then fit their credit score. Next slide, please. Yeah, now, yes, we will have a poll here. So we will have like 2 to 3 minutes to reply to this poll, and then we can go to the Q&A session. Okay, good. I think we got the results. I do have a few more slides, and then I think we can go for the, the Q&A session. So yes, next slide, please. We'll go through them very quickly. So yes, I just wanted to deep dive a little bit on how data sharing initiatives can support MSME finance. Yes, next slide, please. So yes, in the future of global fintech, we also ask us to the fintechs, like how do you see what will be the main issues in the industry in the next 5 years? I mean, like as expected, many said AI in finance was the most relevant issue, but open banking and open finance was also important. And we also asked them, do you think like is or would open finance or open banking framework support your business? And over 60% said it would support their business or is supporting their business. So data sharing protocols is very important. Now we have seen that most of those companies have partnerships with incumbents to have API connections. Next slide, please. So yes, here we can see once we ask it here, we can see that there's not much difference between EMDEs and advanced economies. Most of fintechs operating in both regions think that those protocols are those frameworks are very important to. They agreed that it's important to their business, and 1/3 even strongly agreed. And we also asked it if digital public infrastructure, which is DPI, is important to their business, and they think it is. DPI is defined as reusable, digitally enabled platforms and building block services across public and private sectors. So digital ID, digital payment, so fast payment system, and data sharing, protocols, which then encompasses open banking and open finance. Next slide, please. And as when we ask us what's DPI improvement would you benefits, and most of them said integrated EQIC platforms, streamlined digital payment systems, so systems like Pix in Brazil, and comprehensive open data initiatives, which is what the UK government is doing right now. They're strongly investing in the smart data initiative. And then also DPIs to support cross-border transaction is something that fintechs highly see as a benefit. Next slide, please. So here just wants to show an overview how data sharing ecosystem would work. Like the API will connect like these digital infrastructure. So you have the digital payment component connected to the digital data sharing protocol as a central component of this infrastructure, and digital ID. They are all generating data and also creating new and alternative data, and companies can access it, process this data, and then create monetization, which is creating tailored products to like which will improve like pricing and also expand their markets. So yes, this is very basic overview, but it's just showing how a data ecosystem can improve finance overall. Next slide, please. So here I have a quick case study in India. So India has implemented this Sahamat account aggregator framework, which basically is a data sharing protocol, which like can be accessed by through the open finance layer, and so far it generated 369 million consents and also there is like over 2 billion accounts eligible to access the system, with already over 200 million linked to this new system. Of course, many of the data come from banks, with like most like of this data being used by non-banking financial institutions, so which means like fintechs and other lending providers, which is very important. It just shows, how those data protocols enable through open data, open finance, and open banking really create this connection in the market. So like how those lending digital lending companies can use positively the data coming from banks, and it will support in lower generation. We can see here that in a product wise distribution, most of those companies are managing to generate more personal loans, and also some unsecured business loans, but you can see like the whole portfolio is growing, which is good for the final consumer, but also for businesses, as we can see. Yes, next slide, please. And here, yes, just to know how the data sharing can support like in three domains. So it can enhance access to credit. So as we can see, like it will support in loan generation from both business and consumer. And data sharing standards encourage competition and lower fees of transactions, which then MSMEs will benefit. It will also business will also have a better business finance control. So we see now those embedded finance platforms which offer like a platform for like dashboards, and also aggregate all the financial history of those companies in a single place, which is like works as a one-stop shop functionality. And so it will improve their financial health. And then finally, with this data ecosystem, like financial providers will manage to offer more tailored products with more competitive prices. Yes, very quickly, I wanted to go through because we are like reaching the time. So yes, here is just, sorry, I have this last slide, which is evidence from our APAC study. So we also asked like which type of documentation you provided when applying for the loan, for a loan, and many of them applied for a loan using like business information, but still many use it personal information only, which means that they face challenge in getting the paperwork for the loan application. And what were the main reasons for this is absence of financial history, lower no credit score, and lack of collateral, or the business was unregistered, which then we show like how this data ecosystem, like digital ID and a fast payment system, all connected in a data facilitated data protocol in this public infrastructure, will then improve um, um, the business and the life of those businesses, which they will manage to have a more a better ecosystem to share the data, and it will then positively affect their financial history and credit scoring. Yes, thank you very much. I think that's it, and now we can go for the Q&A and discussion. Sorry, as I can see here, we have here, yes, some how do you think AI supports institutional to improve service to SMEs? Yes, I think uh, yes, I think the results of the poll were quite aligned to my discussion here. No, so as I showed in this data sharing ecosystem, no, like AI can really play a role with those companies having more access to data or using alternative data from, today many of those digital finance providers or, financial institutions overall use alternative data. So data of your behavior on like social media or how you shop, for instance, and they manage to use it through and use AI to improve their analytical. So, for instance, they will get those databases and generate a machine learning model, and will try to identify, like what is the credit score of their clients and see, they will manage the risk better, basically. So they will use AI for risk assessment and improve its credit scoring, and with this they will manage to disperse more loans. So this is just one way, of course, that AI can be used, but for this, you know, we would have to have safeguards in the this data sharing ecosystem. We are seeing like some countries doing some trials with this, no, like mainly the ones with are running open finance and open banking frameworks. For instance, like how companies can use like Pix in Brazil, the data generated from this ecosystem to then use AI models to disperse more credits to their final customers. It's still a very unexplored field, but I believe in few years we are going to be seeing more AI uses to within this data sharing ecosystem. Uh, so I have here issues of data breach and yes, I think risks related to AI, as I talked about, we are seeing many companies concerned about deep fake and hallucinations. So they are still struggling to understand like how, okay, if I adopt AI in my service, how I can overcome those you know external risks that might not be related to my service itself. So how I overcome barriers related to deepfake AI deepfake. So this is one of the main risks that financial services see, and explainability is also a risk that those companies see. So, okay, how do I explain my models? For instance, okay, I'm getting the data from my customers and using AI models to run these data. How do I make sure that it's clear to my customer that the way I'm using this data? So it's also some of the risks raised in specific AI risks for digital finance organizations. Mm, so yeah, here another question. So yes, I think Nadia's your question is good. How does AI support open bank initiatives? I think I just shared. Well, AI is not fully used yet within like open banking ecosystem. We have some trials. I would tell you to try to see what the which country, sorry, the um, United Arab Emirates are doing. They are creating very strong AI um, a framework for like to be used within like the open finance context. So yes, if you can, I think I would tell you to make some desktop research on this on UAE, and I bet you are gonna get some good insight from there. And also the UK Smart Data Initiative. It's still a very nascent initiative, but here in the UK, and the government is trying to understand, how to better use the open banking framework, to create a better ecosystem. So, cross data, data sharing in organization, and how those organizations can use AI with the proper safeguards to then be beneficial to businesses, like by using alternative data. I hope I answer your question. And yes, yeah, the access to finance for MSMEs is a global issue, of course. Well, I think, yeah, many countries are looking to this, improve it, digital public infrastructure. So how those components can be beneficial to SMEs. I think in Southern Africa, overall in Sub-Saharan Africa, now they just only implemented, the fintech passport, which fintech um, from, I don't know, Kenya can operate in Nigeria with the passport without going through, a licensing and registration process. I believe this will be positive effects on MSME borrowing as well. And of course, sorry, some. And then yes, of course, I think, those improved digital infrastructure can be always beneficial. No? So if you manage to have access to data and using the data in the best way, you can then offer better product with and cheaper products. But of course, I think there is one issue we realized in our research is, fintechs, for instance, in sub-Saharan Africa, really struggle to access capital. So if they struggle to keep their businesses, it will be also difficult for them to then go to the next step and offer, credits to MSME. So yes, I think first the business environment has to be positive for those fintechs, which there is many people in the region trying to do so, and then it will reflect on a better market for MSMEs. And of course, regulation is something that should be minded by policymakers. So maybe one more question, because we are already 7 minutes over time. Uh, yes. So how can financial institutions design inclusive ecosystem that utilize alternative data validation techniques to provide collateral free? Yeah, this is a good question. I think it's $1 million question. Yes, I think there is, well, the use of alternative data is already being, tried in many regions. There is a paper in the discussion, like DPI, so digital public infrastructure to agriculture. So what is some of the solutions tried is to connect data from, for instance, satellite, crop, and you know trying to create this, to embed this data within this data ecosystem, and it will then be used to improve the credit history of small farmers, and then companies will manage to to run credit scoring to those small farms, and then also disburse more credit. So yes, I think there are some financial institutions already doing those, trying to create and design those inclusive ecosystems. So for instance, one of the participants in the Asian study, they are really trying to design this inclusive ecosystem. But one thing they shared with us, for instance, is that regardless of the technology you use, you can use AI, you can collect data, you can like use alternative data to improve credit scoring, but still you need to have a good relationship with those farmers. So they still go, like they still have agents going, in fields and talking to the farmers to understand what are their real issues. So it's kind of, you can create very fancy and technological system, but if you don't really understand what is the real life problem faced by those small entrepreneurs, it will be always hard to develop whatever you are trying to do to improve their access to credit. So yeah, it's just a balance there. You have to improve technology, and you can use alternative data, and those improved infrastructure will help you, but still you have to understand your customer at the end. And yes, I think that's it now. Yes, it was very nice presenting this masterclass to all of you. I hope you enjoyed, and I hope you have learned a little bit more about fintech and MSMEs access to credit. Thank you so much.